Once you've queued, recording started. Thank you. A very good morning to everyone. We welcome you on this special podcast for by the IIFT alumni for the IIFT alumni. Today, we welcome Gaurav Goel, who's a alumnus from the 2000 batch of IIFT Delhi, right? Gaurav Goel is a seasoned SEBI Registered Investment Advisor who embodies the experience and dedication that today's investors seek. He has over 2.5 decades of experience in wealth management industry across India and Singapore. Gaurav has been instrumental in shaping the investment portfolio of numerous high net worth clients across ICICI Bank, Barclays, IFL, so on and so forth, right? And of course, he would reflect his commitment to the core principle of fundamental investing and long-term wealth creation as we speak to him today. So, Gaurav, over to you. Please tell us about your IIFT days. Which was your first job? How were your IIFT days? Masti, Bhuchal, whatever. So, a little reflection back before we deep dive into the core topic of the day. Over to you.
So, thank you, Samir, and thank you, IIFT alumni team, for having me on your show. And it's great to get connected with my alma mater. And it's an emotional experience to get connected with you guys and to share my learnings with you. So, yeah, so it was a fantastic 2 year stint with IFT way back in 1998 when we started it and lasted for 2 years till 2000. Um, a lot of masti, lot of great friends. The batchmates were exceptional. Still connected to a whole lot of them, and it was a lot of cricket matches. We had badminton and football we used to play, and besides the studies, of course, we had great professors. So I still remember one of them as a guest lecturer was the India's revenue secretary at that point of time.
Yeah.
It was great learning, and I carry this IFT badge even today wherever I go. So when I introduced myself as an IFT alumni, it really carries a lot of gravitas, and suddenly you feel, you feel respected and you feel good about, when the introduction happens and IFT name is mentioned. So in a way, IFT has given all of us and all of us who are here at this point of time a lot which cannot be explained in words. So that is how what IFT is, and IFT as a brand is. We might not recognize it at that point of time, but today it makes a lot of
Great.
sense.
Great.
Secondly, so my journey has been great thereafter. The placements put me into an FMCG company. At the beginning, I was keen on marketing job, but as destiny would have it, I became a part of the financial industry in 2001. Joined ICICI Bank, um, became part of the personal banking and later private banking in Singapore with ICICI Bank itself. And in 2008, at the peak of crisis, I had joined Barclays as a private banker, which the stint lasted for 4 years, gave me immense amount of learning, Samir. I can't tell you because I had seen it with my eyes as to how people lost their wealth after making tons of it. And so it was a great learning experience. And Singapore overall showed me how we get connected to the global world, not just living in a cocoon, which is which is India, but I learned a lot about the global aspect of investing and financials. And thereafter, in 2012, I came back to India, became part of the advisory team till the time in 2019, the entrepreneurial bug caught me, and I started on my own as an investment advisor, got registered with SEBI, and since then on my own. So that is how the journey has been. And
Understood.
Yeah, so the entrepreneurial journey has also been great because it gives you a lot of creative freedom,
Yeah.
and you do what you want to do the way you want to do. You're not forced into doing things. So great going at this point of time. I love the work that I do. So it's just like a pursuing your passion, and that's where the love comes from, and it's something which is not forced into. Then it becomes a lot more easier to do.
You found
So
your
that,
Ikagai.
sorry,
Huh?
Ikagai.
You found your Ikagai, huh?
Yeah, so in
And
many ways you can say that, Samir, because I truly am passionate about what I do, and so that means Saturday, Sundays are not really. If I'm working on a Saturday or a Sunday, it it becomes a lot more easier to work on it. It's not a work, and Mondays when I used to do my job in a company, I used to drag myself to office, but now Mondays I look forward to opening of markets. So
superb.
that is how things have changed and evolved in last few years.
Superb, superb. I mean, I think that's the one of the best things I could hear. With that context, Gaurav, we'll now deep dive into the core of the podcast. If you could just run us through the current market trends, and I have a sub question to it. Given the geopolitical tensions which we are seeing across the world, what is the impact on the markets globally and on India, right? So, and then of course, one of the most core questions: how are the portfolios which are you handling of high net worth individuals? Are they bleeding right now? Are they back? A little deep dive. I've clustered about three questions together, but
Yeah.
they're all correlated, so it'd be helpful to get a context from you
Okay.
on
Let me
these three
try to
questions.
answer them one by one.
Sure.
On the surface of it, we see wars, inflation, things, geopolitical tensions, and neighbors fighting with each other or threatening our own country, and so many other things that are happening, and that creates all the noise in the world. But that's the surface. If you realize, Samir, that beneath the surface, such things have always been there.
There. Yeah. True.
You will never find any instance when things have been absolutely rosy and perfect, and
Absolutely.
that's what markets are all about. They have to live in this kind of world and noise and chaos. I can't figure out in last 25 years since I've been in this practically in this journey that I've come across one single instance wherein I can say that such situations have not been there in the past.
Yeah.
It's always, Iran is fighting with Iraq, or, there
Yeah.
is tension
True.
in
True. True.
Israel, or if there is US Russia, or US China, or India China, or India Pakistan. I mean, these things will always be there. And, to my mind, these things are normal unless something extraordinary happens, and you can't rule out extraordinary things. A thing like a nuclear war would be extraordinary, but yes, so I understand the pain that is there in immediate short term, but this is part and parcel of the game, and you
Sure.
have to live with it.
Understood.
Your second question on clients portfolio bleeding or not bleeding is in fact the way you look at it, Samir. So when I look at markets, it's from a very long-term horizon, and I sit on a helicopter and watch it from the top. I have a helicopter view of investments, and my time frame is many many years. It is not 1 month, 3 month, or one day, or 6 months, or 1 year. It stretches upwards of 5 years and extends up to 15, 20, 25, 30 years, and that is how the real wealth is created. And when you look from that perspective, all these things which are happening at this point of time, or will happen in future, or have happened in the past, which seems very big at that point of time, are a mere blip. If you look at it in the long term charts, in long term charts, the chart would perhaps be one straight line, And unless you magnify it from a short-term perspective and see it, it's like this. So if you can overcome this noise of, this extreme volatility that happens at any given point of time and look at it from a long-term perspective, the chart is very smooth.
Understood.
So that is how you look at it. And even the falls in the markets are, to my mind, are great buying opportunities, provided you are doing the right things. And the right thing could be, redoing your portfolio, uh, chucking out the crap from your portfolio, buying quality stocks which you have probably missed out in earlier period, and a lot of other things that have happened. So this is how I look at it. And most often than not, most of the money that I make for myself and for my clients is basically when markets have actually fallen. And you end up buying at that point of time. And when you look back a few years later, you'll realize those were the best investments that you have made. So
Understood.
my first thing when I, onboard any client is I tell them that be ready in case you are investing in equity markets, and equity market just a portion of the overall investment market. And if they're investing money in equity markets, I always tell them be ready to be prepared for any falls in market and treat it as a golden opportunity to invest. You should have a certain sum of money which should be like a powder which is dry, and you can put that money whenever there is an opportunity that exists, and most of the opportunities tend to come when markets are falling.
Understood. Gaurav, here before I get into SIPs and a lot of other technical stuff,
Yeah.
one general question I'd like to ask. Uh, what would be your suggestion if you were to create a portfolio for an IFT, and let's say Adit is passing out next year and he gets a job from IFT, right? So he's let's say a 23-year-old guy. He gets his acha salary packet. What kind of portfolio he should make? What kind of a portfolio should, let's say, Ravi sir, who's here on the call, a 35, 40-year kind of a person should do? What kind of a portfolio a 50 to 60-year-old guy should do? Portfolio. I am not talking about stocks only. Portfolio consists, as you know, I mean, of course, you know much better, of mutual funds, gold, real estate, whatever, so on and so forth. And what is this obsession of Indians with real estate, boss? Is that
Yeah.
a genuine, or good way to invest? So, portfolio and real estate,
Yeah.
portfolio components, three stages: portfolio components and real estate. Thank you. Over
Yeah,
to you.
so Samir, it's a very good question. But the answer is not as straightforward as
Of
just
course,
simply
of course.
simply an age factor to it.
Yeah.
Every individual has a different kind of a risk profile, and you actually invest basis the risk profile that you have, which takes into account your age factor as well. But there are many other things besides age factor which makes a good portfolio to invest in. So first of all, you need to understand the risk profile that you have, which
Okay.
means, in simple language, it means your attitude towards risk and your aptitude towards risk. So attitude is simply, Samir, if I say that you have invested in a particular stock and stock falls by 20%, then what will you do? Even if you know it is a quality stock, but there are people who would say, let's sell it off, buy more when it will fall further, and others might say it's a good time to invest in further in that. What I'm trying to tell you basically, it's all about the attitude and the aptitude. Aptitude is your risk-taking ability, and the ways and means of finding out your risk profile and invest accordingly. So
So let us
basically,
say if we have, let's say, Manas is the person, example, who's passing out from IIFT this year. He gets a 20 lakh job. 20 lakh का average salary मिलता है. What should be his, after his expenditures? Let's say he ends up saving 10 lakh rupees. What kind of a portfolio should he build?
yeah.
Considering that he is pretty aggressive in terms of risk taking, because let's say he has age on his side. Let's say he's 23 as of now. What should Manas do?
Yeah, so again, I would say the build it according to Manas, because everyone will have a different risk profile. They're on a different spectrum of risk, so their portfolio should all be different. It can't be like, you emulating. And I'll tell you a story about it. But say, let's say Manas is a high risk taker, and he wants to build a portfolio. Then bulk of his, let's say 70% of his wealth should be into the equities, and
Okay.
30% should be into various other fixed income options. So a ratio of about 70 to 30 or 75 to 25. This is what we call as asset allocation, should be built. But thereafter, there is more to it. It should not be just concentrated in one or two instruments. So let's assume Manas says, okay, I like Reliance as a stock, and I put 75% of my wealth in Reliance stock. That's not the way it is. It has to be distributed into multiple instruments of investments. That might include mutual funds, SIPs, direct stocks, private equity, or whatever. I mean, a lot of other things which one can invest in. And thereafter, further, a diversification is required. Let's say a mutual fund, not into one mutual funds, but three or four different kind of mutual funds, and each mutual fund probably with a different scheme and different style of investing is how you go about investing. So there is a lot more to it. It's not plain simple,
Understood.
way of
But
investing.
but a
So
broad sketch would be 70% into equity for Manas and
yeah,
so on and so forth.
so
Yeah.
so let me just tell you. So if you are a risk averse investor or conservative investor, then your equity allocation should come down accordingly, and you should be willing to compromise on the returns that it is going to give you. You can't expect a 15% return on your portfolio if you're a conservative investor. So basically, what I'm trying to tell you, that risk and return go hand in hand,
Yeah.
and one cannot be greedy to say, I want a 15 or 20% return, but I'm not going to take any risk with it.
Yeah.
So it is not like that. Risk and return have to, they move along each other. So more the risk, more the return; less the risk, less the return, and that's the golden way of doing it. Earlier you understand this concept, better it would be from an investment perspective.
Understood. And are gold, silver, and real estate better investment opportunities than equities? How do they? Because if I see यही चार पांच चीजें हैं in the entire portfolio which we juggle around with.
Yeah.
So are the three better than equities, or equities is better than gold, real estate, and silver?
Yeah, Sameer. So that the second part of your question was about the real estate.
Yeah,
Traditionally, we have all been into real estate. I mean,
absolutely.
you,
Yeah,
me, my parents. It's come along, and it's given good amount of returns. But when we calculate returns, a real estate has, on an average, given about 11.6% return year on year, and that is something that we have calculated. On an average kind of a return, wherein the equities since the inception have given 15% return. Uh, but mind you, what tends to happen is that real estate, you stick with it thick and thin. So even if real estate has to go through cycles, it moves up and down. Yet people are either oblivious of the market prices, or they have this innate tendency wherein you will not sell, or the complications that comes along with selling it, that you stay put in real estate for a long period of time and allow that compounding effect to happen, and you see that real estate giving you tons of money, but ultimately it's compounding at 11%. In equities the same thing is happening at perhaps 15%, but there is this thing wherein the liquidity is always available. You go about selling it in a year's time. If you've maybe got 20% return, you don't stick in equities for a long period of time. And somehow, while real estate has given good amount of returns, mind you, 11% is not bad at all. But that does not mean that you put your entire money in real estate, or you put your entire money in equities, or you put money in gold and silver. So gold has traditionally also given about 11% kind of a return, but when you talk to your elders, then they'll always tell you, अरे गोल्ड का प्राइस तो कभी गिरता नहीं है,
yeah.
अरे रियल स्टेट में देखा हमने, इतना किया था, 30 लाख रुपए लगाए थे, आज 6 करोड़ रुपए हो गए हैं.
बिल्कुल.
And
I get to
हाँ,
hear this.
but that is the general psychology of people. Trust me when I'm saying this. the best asset class has been equities, but it does not mean that you put your entire amount in equities. So there are pillars of investing, and you have to put a certain chunk of money into each pillar. So there is a
Understood.
chunk of money that you need to put into equities, you need to put a chunk of money in fixed income, you need to put some money into real estate, you need to put some money into precious metals like gold and silver, and so on and so forth. So the whole bottom line is that you have to create a balanced financial plan for yourself. And it depends upon your risk taking ability. The asset allocation in each of these pillars of investment has to be done basis your risk taking ability and your attitude and aptitude towards risk.
Understood. Gaurav, with the markets bleeding so much, and of course, I'm coming back to equities as an asset class. Should I stop my SIPs right now? बंद कर दूं? क्योंकि मतलब and मतलब once I see I'm confident that the markets are rising, then I start them again. अभी मेरे को थोड़ा टेंशन लग रहा है. I don't want to continue with them.
So
So, what
Samir,
would be your suggestion on that?
So, Samir, I know you. I know you as a friend. I will not let you do this crime. So, systematic investment plans, and most of you, and by the way, you said Manas, if he has to do something immediately after earning 20 lakhs, first thing I would tell him is to go about and, whatever investment saving is he's doing, a portion of it that should be invested in systematic investment plans. Every month, whatever you're saving, just put some amount of money with whatever you're comfortable with. Is just go about putting in SIPs. SIPs, to my mind, is if it is not the first wonder of the world, it certainly is one of the wonders of the world. And because compounding itself is a miracle, and the compounding effect comes into play in SIP like in no other instrument, perhaps. And you hold it for a long period of time, SIPs, without using or applying your mind that market is bleeding or market is moving up or it has already created a huge amount of returns, so I should now come out of it and then re-enter at lower levels. And so nobody is a soothsayer, nobody understands, nobody can predict markets in short term कि आज बढ़ेगा कल नहीं बढ़ेगा, मैं market को time कर लूंगा. Nobody in the world can time the markets, Sameer. Please don't do this crime. I would call it as a crime. Please stick on with your SIP investments and stick on those SIPs from a long term
Understood.
perspective. I want to just share one statistics, if you would allow me, Samir,
Please,
on
please,
SIPs.
please.
And this is one of my favorite SIP story. And if you put 10,000 rupee of SIP every month, about 1,20,000 rupee every year for next 20 years, then your total sum would be about a crore of rupee after 20 years. So a 10,000 investment would become 1 crore rupee in 20 years. And if you step it up by 10% every year, so 10,000 per month becomes 11,000 next year and another 10% thereafter every year. Let us assuming your income is also increasing by that amount. Then, if I may ask Samir, can you just guess what would the amount be after 20 years?
You just said 1 crore, 10 with a 10% setup, but it could be higher. It could be 2 to 3 crores, perhaps.
Yeah, so the answer to that question is on a rough calculation basis, it would be about 6.5 crores after 20 years.
Wow, wow, wow. So
So,
SIPs with a 10% escalation, where the 10% increase every year leads to about 6.5 crores in 20 years. Amazing.
yeah, yeah. So that's the story of compounding, and
But
that's
Gaurav,
something which people
मेरे को
need
तो
to really understand, appreciate. If you
understood.
want to create wealth in investments and not fall prey to, uh, all the noise around the world. And I don't want to disparage anyone in terms of, derivatives. When you start using instruments
We'll come
as
to that, Gaurav.
instruments,
We'll come to that. We'll come
is
to that.
instruments
Those,
of
that brings
gamble, then, yeah,
that brings me to a very quick question for you. There,
yeah.
uh, in terms of let's say for example, yesterday I was talking to a friend of mine having coffee, and he said, "यार बॉस, मैंने तो अडानी में पैसे लगाए थे 2 साल पहले और मतलब इतना मैसिव गेन मुझे मिला." and ये सब mutual fund, gold, silver, real estate बकवास है. I directly invest into equities. I'll find out the next buzz or whisper or grapevine going around, do my little bit of analysis and invest into the stock and make big money. How do you make quick big gains in the market? Because everybody is interested in that. सबको quick big चाहिए. SIP is very good. That is fundamental discipline, as you said very clearly. 10,000 रुपए महीने के जो मानस आराम से इन्वेस्ट कर सकता है, और मानस चड्ढा सोच रहा होगा कि why he's been picked up. It's just that we just take an example, right? Probably we like the name. So 10,000 rupees every month with a 10% escalation drop. SIP में invest कर करके 70% of his portfolio, he's made 6 crores in 10 years, in 20 years, which is an amazing amount. But people seldom want to, the mind is like थोड़ा smart. He says, यार discipline छोड़ो. वो जो मैंने कहानी सुनी थी ना, वो अडानी में 2 रुपए लगा के 10 रुपए बन गए when it was down. So how are these stories true? Because the mind attracts you to that, and everybody wants to make quick, big money. Focus on the words, quick, big money. So
Yeah.
I'd like to get a perspective on that.
So Sameer, let me tell you, there is no philosopher's stone here. There is nothing like a quick fix or a quick money that you can make. There is nothing like a concept of overnight millionaire. You can, but you have to be extremely lucky to that. It's like buying a lottery ticket, and 1 out of 10 million people might just, get that lottery in their name, and you become rich. I would suggest Manas to probably take that money, and if your friend has invested in Adani stock, in one single stock, and hoping to make extraordinary returns
हाँ,
and
because
by
उसको टिप आई. He said यार अभी अडानी डाउन है, लगा ले पैसे. लास्ट ईयर भी बढ़ा था, अभी भी लगा ले. अब तो देखिए 6 months में you'll be a billionaire.
ये जो टिप्स होती है ना, यूजुअली अनलेस यू आर वेरी लकी एंड everything is going in your favor, then perhaps you don't even want to need to invest. Yeah, you'll be born in king's mansion and you'll get everything. But I'm just saying, for an ordinary person like you, me, and everyone else, there is nothing like quick money or an overnight riches kind of a story. हम लोग कॉमन आदमी हैं, हमारा किस्मत इस तरह से नहीं होता है. विंडफॉल गेन्स हमें ऐसे नहीं मिलते. अगर मिलते भी हैं, perhaps the better story would be to take that money and go to a casino and play. यार, your money can double, or perhaps it can become half or double. But since you are so lucky, you will make more money in a casino. So there is, I think, basically the golden principle, Sameer, is the fact that if you want to make money, you have to spend time. You have to spend time in also understanding where you're investing, and then invest your hard-earned money. Don't fall prey to such things wherein people say आ जाओ और आपका एक साल में 3 गुना पैसा हो जाएगा, 4 गुना पैसा हो जाएगा. अगर हो जाए तो बहुत अच्छी बात है, but chances and probability of that happening are low. Please, and I would request all the young guys here and people who have also, otherwise also IIFT alumni and other set of people, please don't fall to such fraudsters, such tricksters. ऐसा कुछ नहीं होता है, कहीं नहीं होता है. चांसेस जहां पे भी आपको कोई ये बोले कि आपको एक्स्ट्रॉर्डनरी गेन्स मिल रहे हैं, 30%, 40%, 50% आपको रिटर्न मिल रहे हैं, तो आपका एंटेना खड़ा हो जाने, रेडार खड़ा हो जाना चाहिए, कुछ गड़बड़ है यहाँ पे. आपको रिटर्न शायद मिल जाए 30%, 40%, पर आपका प्रिंसिपल शायद नहीं मिलेगा. तो beware, and I say buyers beware, I say investors beware. Please don't fall prey to such things. ऐसा magic amount कहीं नहीं मिलता है.
But Gaurav, that reminds me, future and options and derivatives are being used as a tool. इतनी कहानियां सुन रहे हैं, let's make a crore today. And so on and so forth. So मेरे पास 20, Manas says 20 lakh rupees, he says 10 lakh rupees. Why would he get into the discipline of investing through SIPs into the equity market and so on and so forth? Why won't he play the future and option games, which is far more exciting? 10 lakh का 1 crore बनाए, or he can then resign in 5 months, possibly live in Goa if that's what Manas wants, and have a beach life. So is that possible? Over to you. The F&O game, derivative games.
So Sameer, you are absolutely
because it's so
right.
exciting. It's so exciting. Why would Manas wait for 20 years में मैं sip करते रहूं वगैरह? I don't know whether he wants to.
किसके पास टाइम है इतना? 20 साल का पेशेंस है.
20 साल देखा नहीं देखा. Manas wants it now. He wants it
किसी को
now.
किसी को क्या पता समीर, यू आर एब्सोल्युटली राइट. एंड अगर आपको थ्रिल चाहिए, एक्साइटमेंट चाहिए लाइफ में, यार गो टू फॉर्मूला वन ट्रैक एंड रेस अ कार यार. आप एक रात में, मैं सिंगापुर में था, मैं कसिनो जाता था मस्ती के लिए. हाँ, खूब थ्रिल, खूब एक्साइटमेंट होता था यार. आई वुड रिक्वेस्ट मानस टू जस्ट गो डू दैट ओवर देयर. सी FNOs एंड फ्यूचर्स एंड ऑप्शंस, ये सब जो स्टोरी है ना, it looks very very exciting, Sameer. And I have 25 years of experience in this field. I have seen not just equity derivatives, I've seen currency derivatives, interest rate derivatives, and n number of other things. And when you treat FNOs as a hedging instrument, for which it was originally conceived as, FNOs were conceived as hedging instrument. Today they have evolved into speculative instrument. That is where the problem is. So, I mean, I would ask most of the people who are here and probably would be listening to this webinar later on, put your hand to heart and say how many of you have actually, and mind you, I'm not talking of 3 months, 6 months. If you have been doing it for 2, 3 years, 5 years, you will realize that bulk of this set of people won't have made money in futures and options.
बट
They
गौरव, इतने
would.
सारे फिन इन्फ्लुएंसर्स आते रहते हैं ऑन
तो
यूट्यूब
तो
सेइंग मैंने 5 लाख लगाए.
तो
मेरी माँ भी कह रही है, लुक एट दिस यूट्यूब गाय, ही इज
so
मेकिंग रेकिंग इट इन बिलियंस. What about those fin influencers and all the
so
YouTube guys
so
we are seeing?
Sameer, don't fall into the trap of this noise. This is noise, my friend. Just so SEBI itself says 93% of traders who are doing futures and options as a trading activity are losing money on their hard-earned money in through these instruments. So you have to be careful, Sameer, and you have it's not something money that has come to you as a windfall. Yeah, कि आपका पैसा आएगा और आपको चला जाएगा, आपको कोई पेन नहीं होगा. Other than, I mean, I would have seen at least thousands of portfolios till date in my life. I've come across big investors who have put money and lost money through derivative instruments. So I'm not, there is, first of all, you just need to study a lot. You need to understand the technicals to really get into futures and options and a lot of other things. But at the same time, I think the probability is just about equal in terms of making a money in a trade. And over a period of time, when you undertake multiple trades, then you could lose, you could gain, but it's all more like luck playing its part. So I leave it there. I don't want to disparage anyone in terms of saying that their art about studying futures and options or is bad or good. I don't want to get into that, but I would really tell people out here to do some core investing wherein you understand the fundamentals of a company, you understand what it is, how it's going to progress in future, what is the management team that is, ultimately it's the underlying, the performance of the company is what drives the price of the stock. And hence, if you're not investing and not understanding the company and just going by by some patterns and charts and then letting your psychology play into it, so
Okay,
it requires a huge
Gaurav,
amount of
understood. Understood.
discipline, my friend. So that
Understood.
is the
Understood.
whole point. Yeah.
Okay. So I'll uh, come to a very relevant question now. So if I was Manas Chadda and I've understood कि बहुत सब ये सब ठीक है, understood. I've understood the risks and returns. अब मेरे को portfolio level पे समझ आ गया. I've understood the components, how I work, and I'm starting off in line. I understand equity play करना है, but derivatives could be slightly smarter. So now, how should I do my equity play? I mean, should I invest in equity mutual funds directly? Should I look at SME IPOs, or should I invest in multi-bagger stocks? So how do I play my equity game? Is what I'd like to ask you.
So if it's just about equities, I think you should build a good portfolio of stocks and mutual funds, not just limit yourself to one particular instrument, as I said earlier. And also in mutual funds, you should have multiple mutual fund schemes. One could be a large cap, one could be a mid cap, one could be a small cap, one could be a flexi cap scheme. Then you should have a stock portfolio, which should be probably 10 to 15 stocks, very well diversified. You should understand the companies in which you're investing. You should know what its potential is. You should understand the balance sheet of the company. Uh, you know, the return on assets, return on equities, and the revenues at which it is, the margins at which it is uh, margins that it's creating, EBITDA levels, and so many other things. There is a whole list of fundamental plays that you need to study. It cannot just come in one shot, one go. You have to get into it, read balance sheets, and understand it, and understand the ratios that are there. So a lot of things are available, thankfully, these days on net. So you just have to open a site and you can understand that, make peer evaluations, understand the industry. uh, so it should not be a dying industry. More importantly, the promoter should be good, and promoter should be honest. He should not be keeping all the money in his own pocket and passing on a bit of the returns to the
Understood.
shareholders. So there are a lot of things to study. If you can't do it yourself, and a lot of times, in fact, most of the time, people in the group don't really have time and inclination to do that kind of research. So please go to the doctor, just like you go to a doctor for a disease, get it in case there's a surgery required, then you go to a doctor. You please visit a specialist, and a SEBI registered specialist, not to any fin influencer who's just giving you rosy returns, and do your financial planning and invest in the right set of companies.
Understood. Gaurav, I had this when I woke up this morning. I had this great thought, thinking, "Ki boss, I'll not go to work. I'll resign." This thought came to me because वो COVID में वो 7,000 हो गया था, तो वहाँ पे I invested in a couple of stocks and they almost tripled, right? And COVID made a lot of people millionaires because at the peak of COVID, the market had fallen down to almost between 7,000 to 8,000, and and then of course in the last anybody who would have invested in that bottom and could have foreseen in the next 3 to 4 years, they of course made substantial amount of money. And I'm sure you would also be surrounded with a lot of those HNIs. So theoretically speaking, if I was to not to go to office today and call up my boss and tell him I'm resigning today and put all my money in stocks, would I still become very rich? Is it so easy to become rich? And then we'll open that's the last question, and we'll open the floor to the audience. I'm sure the audience would have a lot of questions, and that's where I would really like to spend time now.
So, Samir, there is money making is not easy, let me tell you, but it requires a certain amount of discipline. And if you're disciplined and you're doing the right stuff, then money making becomes a lot more easier. And when I say this, you said about market, falling to 7,511 during the peak of COVID crisis on March 24th, if I'm not wrong.
Correct.
So to 2020. So and but it had fallen from a much higher level.
Yeah.
So people did they invest at 7,511?
Yeah.
So there has to be a method to madness, Samir. So anyone who is just thinking in last 3 4 years I have made such money, and let me be very honest with you, people who have entered after COVID have not really seen any significant fall in markets. Markets fall can be brutal. They can shave half of your wealth in no time and you won't even realize it. And it is then I've heard of stories in 2008. I've seen SOB clubs getting created and people crying because they've lost a lot of money during the crisis. So market falls can be brutal. We just witnessed a 10% fall in equity markets, and people were like, literally, I got so many calls saying that what is happening to markets and where will it go, and people becoming panicky, and why did I invest my money in markets, and I should have booked my profits when market was 26,200 and now it has fallen to this level, and what should I do? I said, why did you invest with a 2 month or a 3 month time frame? If you invest in for a long period of time, you will see this as a huge opportunity to invest in. Have the fundamentals of the country become weak? let me tell you, I think we are in a golden period, Samir. And India, much of the returns that we are going to get are in a front view, not in the back view mirror, right? Uh, the kind of wealth that has been created so far in India is probably just 10% of what is going to be created in future. There's huge amount of wealth that has to be created in India, and next 20 years are going to be the global period in Indian history, in the world history. In fact, I don't think any country will give you the kind of returns that India is going to give in next 20 years. And I'm extremely optimistic about India giving you supernatural returns on your investments. But for that, you need to have patience, right? The markets. Don't think that you will jump and just make quick money. Yeah, please.
Patience and planning only will rule the roost.
Method and method to madness. So there
And
is
method to
this
madness.
is my yes. There has to be a method to madness. There will be equity markets are a madhouse, Sameer. वहाँ पे कुछ ना कुछ हमेशा चलता रहता है. It is a पागल खाना. आप अगर हर पागल खाने में हर एक समय पे अगर आप रिएक्ट करने लगोगे, और इफ यू डोंट हैव इमोशनल इंटेलिजेंस, बाय द वे इक्विटी मार्केट्स में कोई सुपर नेचुरल इंटेलिजेंस नहीं चाहिए. यू जस्ट नीड normal intelligence with huge amount of emotional intelligence, and that is where that is आप normal behavior रखो यार अपना. Don't get panicky in extreme situations, and there is no way you can go wrong. And long term में 15% is, if you see the history of Sensex from 1979, you got almost 14.5% return plus your dividends that you get. So 15-16% मिल जाता है. But that you need to have the patience and conviction. Conviction is another great theme. You should believe in yourself
Understood.
and your choices.
Understood. Aditya, could
Yeah.
we open the floor for questions? There would be a lot of specific questions on mutual funds or equities, allocations, so on and so forth. And of course, I hope everybody is understood to be beware of all these fraudsters, fintechs, and khanis on YouTube and so on and so forth. Be extremely planned. It's better to jump into a casino or watch Formula One if you want to get the thrill of life. But if you are getting into equities, it is better to be prepared and extremely planned and patient, right? And of course, go to a good SEBI registered investment advisor who gives you the right game, because that what makes you big bucks in the long term. Uh, uh, Aditya, if you could just open the uh, question answer queue, please. Yeah. Yeah. I would love to see Manas here because we've quoted him. I'd like to at least thank him because we've used his
Manas,
name
yes.
used his name a lot on the call. So at least I'd like to thank him personally, right, as an example. Manas, if you're there, if you could just unmute, we could just say a quick hi to you and a thank you to you. That's okay. I'm sure Manas can join in due course of time. Vikasji, we can take your question now. Aditya, if you could just have Vikasji. Gaurav, I would be on mute. I would come in and go out because Aditya is the one who handles the queue.
Sure, no problem.
Yeah, Aditya, over to you. Please manage the.
Hello, can you hear me now? Yeah. So I was just, saying thanks to Gaurav sir and Samir sir for organizing this podcast. And as Gaurav sir, as you mentioned that diversification is important and staying in market for longer horizon is important. So given these things, what's your view on diversifying to other countries? Like, obviously India is a growth story and will remain for another 15, 20 years, but how to benefit from other countries? And do you have any example of any country going wrong and, their markets going wrong, like, go down as well? Because we hear that, India is a growth story and it won't affect your investments. But will any country, investing in any country will affect any investments, like given that theory? Have you
Yeah,
seen any
so
example of that?
Vikas, it's a very good question. Actually, geographical diversification is a very important theme, and unfortunately, when we stay in India, as I said earlier,
Mm-hmm.
we tend to stay in a cocoon. So हम लोग India के beyond ज़्यादा सोच नहीं पाते हैं. But the
Mm-hmm.
important thing is geographical diversification is perhaps as important as any diversification, and typically we should have some amount of geographical diversification in our portfolio, maybe a 20 to 25% diversification, let's say into a portion into US, a portion into China, or emerging Asia, or into some other countries like maybe Australia or Europe. Kind of those things are possible and should be done, and I am all for it. In fact, in my personal portfolio, I have a geographical diversification in my portfolio, and I strongly recommend it. As for your other question, there are a lot of countries which have, you know, gone down and gone south when it comes to investment. So you have to be extreme. For example, Argentina, there was a
Okay.
crisis in Argentina, and there are numerous other examples. I mean, so you have to select your geography with great amount of, study that you have to do. You have to understand the theme. Is it something which is, for example, let's assume um, you have to see Japan has in last 30 years, 35 years, after peaking in 1990s, for almost 30 years it had actually given zero returns, and it's an
Oh,
aging population. You have to look into a lot of factors. I'm not saying that Japan is a bad investment destination. I'm just saying that you have to see a lot of things. In China there could be regulations which we can't really comprehend, and while China's if you see the valuations of China, and they're fantastic. But someone had put it very, very beautifully that China is like jail, Japan is like a hospital, and Europe is like a museum. So where do you invest? So you have to choose your geography very, very carefully, and putting right money in right geography can really help, and help you in terms of diversification. But be careful, and yes, it is
okay.
important.
Okay. Thanks for this.
Yeah, hello, sir. Good morning. My question is like, if we have to start up a wealth management firm, like, what will be, say, regulatory requirements and, like, how to go about it, basically.
So it also So, Ravi, there are a number of things. A wealth management firm could be in terms of an AMC, a wealth advisory firm, lot of things that you do. Let's say if you want to get into my kind of profession, wherein you want to have an investment advisory theme, then you need to have a license from SEBI. There are certain terms and conditions. There are certain license. For getting this license, you need to have certain qualification requirements. You have to clear certain tests, their net worth requirements. And so there is a whole comprehensive set of requirements that you have to fulfill to get a SEBI license. I would request you to please visit SEBI website, and there are a number of licenses that you can apply for, whether it's a research analyst, an investment advisor, or you want to create an AMC, or so many other things. There are requirements around that. Please visit SEBI website. You'll get all the information, and you can proceed there accordingly.
Thank you, sir. Yeah.
We'll be putting up your coordinates also subsequently be floating it, Gaurav. I hope that's okay, so that
Yeah,
people
yeah.
connect with you either on LinkedIn or your mobile number in case if they have further queries, they could,
Yeah.
you know.
Samir, so my website is gauravgoel.in. So you can visit, you'll have all the details. If you want to connect with me personally, then I think Aditya, you can float my details, my contact details, and social media connects. So anyone can connect. You want to have a personal question regarding investments, please feel free to call. I would be very happy to answer my alma mater colleagues and batchmates or whatever. So
Sure. Folks, we can take only one more question. We have a hard stop at 10:30, so we have 4 minutes
Hi,
left. There's a
Gaurav
question,
sir.
please.
Hi, my name is Kushal. I'm from the batch of 1719.
yeah.
Just a small, since we're very beginner investors, so there was one suggestion from your side. You said that real estate also and gold should be a part of our portfolios. So I was just wondering because real estate generally tends to involve very high ticket sizes. So how do you suggest we diversify at a initial stage of our investment career, or should we wait for a certain stage before we get into real estate?
See, okay, that's a tricky question, but one theme is that you're absolutely right. It's generally involves you know, big amounts to be invested to get a real estate exposure. But that's just this is a physical part of it, Kushal, sorry.
Uh-huh.
And
Yeah.
you can play real estate in many ways. You can play by, let's say, buying a REIT, real estate investment trust, or buy a stock in case you are not able to do physical real estate, or perhaps ultimately build a corpus around that. But ultimately, at some point of time, you should have a portion of real estate exposure. And believe me when I'm saying this, at some point of time, you will definitely have that real estate pillar of investment in your portfolio. In any case, it will
Sure,
come
sir.
automatically to you. So don't fret
Okay.
over it.
Also, one.
वो हो जाता है अपने
Sure,
आप.
sure.
हाँ.
Okay, okay, sir. So one more question on that. So for real estate investment trust, actually, I had read that and seen in some influencer videos also that they say that these investments tend to be overpriced. Uh, is that right, or is there merit in investing in REITs?
So basically, REITs, when we talk of, they're more of the rental plays and other things rather than the real appreciation. So मेरे को लगता नहीं है कि overpriced होता है ऐसा कुछ. REITs
Okay.
are generally they're very very popular in overseas countries. In India, it has to gain traction. To be very honest, REIT as an
Okay.
investment. So I think it's not a bad theme to have real estate investment trusts and REITs in your overall portfolio. A small portion is probably not unwarranted.
Okay. Okay. Right. Thank you, sir.
But I can buy REITs in India now, Gaurav. How can one go about
Yeah,
investing in
so REITs
REITs?
are available in the market just like you do
Mutual funds.
equities or mutual funds. You can do that.
One can do
But,
that.
but the quantum is very small and the options are very, very limited, Samir, as of now.
Okay. But if I invest into a REIT, I can exit also if I require the
Yeah,
funds in a month's time or 2 months'
absolutely.
time.
Depends generally on the constitution of the REITs, but yes, you can.
Okay, it depends on the constitution. So one needs to
Yeah.
read into all
So
that as well.
everything has to be read carefully, not just as a disclaimer. Yeah.
Understood. Understood.
Yeah. So
So Aditya, over to you.
thank you, Aditya. Thank you, Samir. It's very humbling to get connected with IIFT once again, and I really thank you all for giving me this opportunity.
Thank you, everyone. Have a great weekend. Thank you, Gaurav. Bye.